Hello friends, you're welcome to the Chima Dedicated Video channel. In this channel, we're educators. We educate you on so many areas of life, especially those areas that profit you so much. So one of the things we do here as a financial accountant, I still teach on accounting basics. So in today's video, I want to show you how the principle of double entry bookkeeping works. It doesn't matter whom you are, whether you're an accountant or you have a business or not, you need basic knowledge of accounting, financial accounting. You know why? Financial accounting is relevant anywhere there's money. And as long as you're a human being, you count money, you use money, money flows through your hand, whether inward or outward. You need basic knowledge of financial accounting. So I'm going to show you how the principle of double entry bookkeeping works. And if you're a student or a teacher or a parent, I think you're going to find this much more relevant as you need to understand all these basics. So let's go now. The double entry bookkeeping practical work. Now, this principle states that for every debit entry, there must be a corresponding credit entry, and for every credit entry, there must be a corresponding debit entry. Let me tell you what this means. Simple, in very simple terms. It means that anytime in business, a transaction takes place. What we call transaction is something like Mr. Chike Obi made payments. This Mr. Chike Obi, if we are the business person now, for instance, this Mr. Chike Obi might be someone who bought something from us last time and is owing us. So once we receive money from him, a transaction has taken place. And that transaction can be something like we purchase equipment by cash. That is, as a business, we go to the market, bought a particular equipment we use for that business and paid cash. That's a transaction. Now, in bookkeeping principle, once a transaction takes place, something has happened in two ways. There's a giver, there's a receiver. Someone has received something. Someone has given us something. It does not matter the name of that transaction. That's the principle of double entry bookkeeping. That's the word double. That once a transaction, one single transaction takes place, two areas are involved instantly. And so this principle says, since two areas are involved instantly, that once you debit one of the accounts involved in that transaction, the other account must be credited correspondingly. Correspondingly means if this first account is debited and it has a date like June 30th, the other account that will be credited should also have the same date of June 30th. And if this amount is 5,000 naira, the other account should still have the same 5,000. So everything will be the same. So where you have a giver, there must be a receiver of the same amount, the same date, the same, particulars. That's what the principle is saying. So we're going to go to the practical part of this now, and I'll show you how it works. So I'm going to have two practical illustrations. Now look at the first illustration. It says, on May 23, purchase motor van on credit. Sorry, I missed on credit here. Please get it now. On credit from Kendrick's Motors for 600,000 naira. Listen to me, please pay attention. There's a difference between purchase motor van by cash from Kendrick's Motors and purchase motor van on credit. What I need to add here is on credit. Credit submitted, but bear in mind that is exactly what this is all about. Do you know why there's a difference? If as a business person we bought motor van from Kendrick's Motors and paid him cash, Kendrick's Motors have no business with us. His name can never appear in our books because we have paid him cash. Once I pay you cash, my business with you is closed. I don't even need to remember the person I bought from. We don't need you. We don't need you in our books. The reason why you come into our books is because we are owing you. So when I buy from a credit from you, then your name will be in our books. But if I buy, it's just like I've just gone to a normal market, buy pepper, buy soap. I don't need to keep the record of the people I bought from. But when I buy on credit, then the man who sold on credit to me, I should remember him. His name will be in my books. So that is it. So students should understand that when you say purchase motor van on credit from a company, it's different from purchase with cash. Once you pay with cash, we don't need the name of that company anymore because that name will not appear in our books since we don't have any more business with that person at that moment. Let's get it this way. So that's it. So purchase motor van on credit from Kendrick's Motors for 600,000 naira. Second illustration says on May 28, paid for rent by cash. We as a business will pay for rent by cash 120,000 naira. I'm going to take you now on how to do this. The drawing, everything, how it happens. Now let's go right now. Illustration 1, solution. Now before you start ruling your line, students, everyone, this is where if you're a teacher that teaches accounting, financial accounting, this is the right way to teach this. Don't just go and start drawing. These three things must be specified to the children. A transaction has taken place. What are the two accounts that are involved in this transaction? In the first one, we bought motor van on credit from Kendrick's Motors. The two accounts involved here is motor van account and Kendrick's Motors account. Try to know this. You know, some students don't know. They say purchases account. Nothing concerns purchases here. Because, are you getting it? No, it's not purchases account. It's motor van and Kendrick's. Do you understand that? So, having established that, the next question you ask, okay, this motor van account, Kendrick's Motors account, which accounting classification do they belong to? Types of account. Motor van is a real account. We have three major divisions of accounts. Ledger account, we have the real account, nominal account, and personal account. Real account is account of assets. Everything that is asset falls under real account. While nominal account is account of expenses and income, losses and profits. So anything that has to do with expense, income, loss, profit goes into nominal account, and then personal account has to do with everything that has to do with persons. Persons here is not just only individual, but company, firm, government organization, any organization, they are all seen as personal entities. So they fall under personal account. So the motor van is a real account. Note this. Kendrick's Motors is a personal account. Now, having established that, the question you ask yourself now, which of these two accounts should be debited and which one should be credited? You need to know this. Now, in real practice, in accounting, when you are dealing with real account, whenever a real account comes into the business, the system says debit it. If it goes out, credit it. What is the meaning of coming in? That is, if you purchase a motor van, which is an asset, if you purchase, anything that is an asset and bring it to the business, the accounting says debit that account because a value has come in when it comes to real account. But if you sell one, if you sold one, you have sold a motor vehicle out. That means you removed it, it has gone out. That is value out, credit it. So if you look at this illustration, we purchase motor vehicle from Kendrick's. That means motor vehicle has come into our business. So value has come in terms of motor vehicle. So that motor vehicle will be debited. And now in accounting, I tell students, once you have these two accounts representing a transaction, and you're able to figure out that one of them is debited, then automatically the other one must be credited. That's the double entry bookkeeping. But if you are still in doubt, you ask yourself, since Kendrick's Motors is a personal account, let me ask myself, how do we treat personal accounts? Personal accounts can be of either a creditor or a debtor. Any personal account, either the person is a creditor or a debtor, or a giver or a receiver. An account says debit, debtor or receiver, and credit, creditor or giver. Now ask yourself, this Kendrick's Motors, is he a creditor or a debtor? Remember, we bought motor vehicle from him on credit. So we are owing him. And the person you are owing is a creditor. So Kendrick's Motors is our creditor. And ordinarily, creditors should be credited. Can you see it? So Kendrick's Motors will be credited for the fact it's a creditor, and motor van will be debited because it's a real value that comes in. So even if I don't know what I will do with motor van, and I know that Kendrick's should be credited, automatically motor van should be what? Debited to complete the double entry bookkeeping. This is the wisdom that is being applied and should be applied by every student if you are going to do this very, very well. Now, let's now see how we post them in the ledger. Now, when you go to the ledger, this is it. Remember that the ledger account has two sides. You can see the debit side and the credit side. Now, if you look at my ruling, look at this long line here. It's my center. Ordinarily, that's not the center of this ruling. You can see the debit side is is bigger than this. You know why we do it? As long as I'm sure that I'm not going to put anything on the credit side, there's no need, doing it at the center and now start squeezing things on the debit side. No. Accounting examiners permit it. There are sometimes in the ledger, you are working on an account like this, maybe motor van, and something will be on the debit side and the credit side. In that case, let your center line be at the exact center so that the two sides will be equal. But if you know that you are not going to be writing something on the other side, let the side you are going to write more occupy more space. Do you understand, students? Very, very, very important. That's why you see me rule this line, center line, where I put it, because I want to make the use of the debit side. Remember, motor van should be debited. And so in the ledger, this is what you do. Motor van account will have their particular full amount on May 23. Now, what will be in particulars is that particular account that shared the transaction with motor van, and that was Kendrick's Motors. That's what will be in the particulars. Folio, we may not write it now because we didn't talk about it in the subsidiary book, so it's a page. Forget it. Then the amount is 600,000, and you have closed. This account is closed. You underline this. You quickly underline under here, under that 600, because that's you have closed the account. You put double line on it, and you have done it. Now you go to Kendrick's Motors account, which should be credited. You can see what I did now. Because I'm writing more on the credit side, so I don't need to key myself on the debit side. I leave the small space there. The particular folio amount. As a student, you will say, Mr. Chima, why are you not drawing the lines? Look at the lines you draw in this one. I don't need to do it. If my handwriting can be so neat that one entry cannot cross to the other part, you may not need to be drawing all these lines. Just make sure you put the center line and you are good to go. So you can see my dates still fall under the dates column. My motor van fall under the particulars column. My amount fall under the amounts column. So if I can maintain this, I may not need to waste my time drawing several lines. Students, do you understand that? Very important. Now, May 23, the particular item that shared the transaction with Kendrick's Motors is motor van. So motor van goes into particulars, and then the same amount, 600,000, I double underline it, and I've closed the account. That is it. Let's go to the second illustration. Illustration 2, solution. Remember, paid rent for cash. We as a business person will pay rent for cash. So the question is, what are the two accounts involved? The two accounts involved there is what? Rent account and cash account. Now, this rent account is an example of a nominal account. I told you nominal account are accounts of expenses and income, losses and profits. So rent is an expense, so it falls under nominal account. While cash is an asset, so it falls under real accounts. Now, remember, the question is now, where do we put this? If I decide to start with cash account, I ask myself, if cash is a real account, and I'm told that whenever a real account comes in, we should debit it. But if it goes out, we should credit it. When I pay rent for cash, what happened to cash? Did it go out or it comes in? Cash went out from our business. So a value has gone out in form of real account, so cash should be credited. And knowing how double entry bookkeeping works, if cash is credited, that means automatically rent is what? Debited. What if I don't know what to do with cash, but I know of rent? Since rent is a nominal account, and I'm told in nominal account entries, every expense, every loss should be debited, while income and profits are credited. And rent is an expense. So automatically it should be what? Debited. So if rent is debited, cash is credited. So in my ledger entries, look at what's going to happen. So I go to my ledger entries, and this is rent account, debited. Date, particulars, folio amount, May 28, cash, then 120,000. I go now to cash account, should be credited, May 28. Under particulars, I write rent, the same 120,000 I double on the line. And that is the work. So if you're a student and you're given such a work like this, look at how simple it is to do it. And you know what? Video lessons like this are so powerful. Your teacher may be teaching the class because he's rushing to meet up with a scheme. He may not be able to explain all of this. But having gone through this, even if you don't understand, go through this video again, and again. By the time you do this often, you can be on your sofa, you can be on your bed, going through this. While you're resting, you're back, you're resting from stress and all that. You go through this, you master it, you will do well in your classes. As a student, you're going to do well. You'll be able to master all of this. I don't know what they're doing because the teacher wouldn't have time enough to explain out all of this. It's rushing. Look at his time. The period, the bell is already wrong. But with these videos, you can master these things and become an expert in what you do. I'm going to stop this video at this point. If you need more of this, remember this is the Chima Dedicated Video Channel. If you need videos on stuff like this, tutorials on financial accounting, or money making opportunities, or crypto, or edtech, and job listings, these are part of the things we'll do in this channel. Please don't forget to subscribe, like this video so that YouTube can recommend it to others, and please help us to share. That's one way you can support our channel to grow. Remember to subscribe, please. And when you subscribe, hit that notification bell. Very important. I'm going to stop at this point. Thank you for watching. God bless you.